Have you heard of exchange-traded funds or ETFs? You might not have heard of ETFs, but they're becoming more and more popular globally. As an individual, you can invest in one company, or through a pooled fund, you can invest in many companies. Exchange-traded funds, or ETFs, are a type of pooled investment. ETF fund managers use the pooled funds to invest in a group of companies that copies a specific index. So, your returns should be as close as possible to the average returns of that index. So what's an index? Well, an index can be a group of stocks, bonds, or commodities. An example of an index is the Kuala Lumpur Composite Index, or KLCI, which has the 30 largest companies by market capitalization on Bursa Malaysia. Why should you be interested in ETFs? Well, ETFs offer diversification just like unit trusts. You get to spread your risk over a group of companies just by investing in one ETF. But where ETFs have a real edge over unit trusts is in their low fees. ETF fund managers do not actively make investment decisions, and they also don't have sales agents. This means that ETFs can charge lower fees compared to unit trusts, which means potentially higher returns for you. So how do you choose the right ETF to invest in? First, find the ETF that works best for your risk appetite. If you have less financial knowledge, then you should invest in ETFs that track the overall stock exchange, such as the Kuala Lumpur Composite Index. But if you have more financial knowledge, then you could choose ETFs that are invested in sectors you believe are growing. Second, check out its past performance. This tells you the returns that the ETF has produced over the last 3 to 5 years. But remember, past performance doesn't necessarily predict future performance. Third, look at the tracking difference. An ETF's goal is to deliver the same returns as the index it tracks. It tells you how well or poorly the ETF has performed compared to its index. While you want it to be as close to zero as possible, the tracking difference is rarely zero. So should you invest in ETFs? Well, it depends. Investing is always risky. Your capital and your returns are not guaranteed. Follow these steps to help you make a decision. And don't put all your money in one ETF. Diversification still matters, so put your money in various ETFs and in other investments. For a step-by-step guide on how to invest in ETFs, visit www.multiply.org.my. Multiply is a non-profit initiative by Creador Foundation.